Today we are going over the king of business technology, the silver medalist within the cloud space, the one and only Microsoft. Microsoft is the business version of Apple. While Apple sells devices and services to customers, Microsoft sells software and services to companies and governments. It is the tech company with the widest moat because their customers would literally need to commit to a complete restructuring from top to bottom to get rid of them. And even then, it would take multiple companies to replace all of the functions that Microsoft can provide in-house. So does that make it an investment no-brainer? You'll be able to decide that for yourself after our deep dive into Microsoft. As always, let's start with a bit of an overview. Microsoft breaks its revenue down into three major categories. One is their enterprise services, focusing primarily on large companies, organizations, and governments. Two is their cloud division, which, focuses on the cloud. And three being their customer side, or in other words, us peasants who only have like a $10 or $20 subscription every month. We are also the most neglected, wandering peasants in the Microsoft empire. Microsoft operates in many different segments as well. They have devices, such as their Surface lineup and primarily the Xbox series. Subscriptions include Windows, software like Office, and you have the cloud component as well, which is called Azure, which offers numerous tools and benefits to those who use it. It launched Microsoft Teams to compete with Zoom and Slack, and despite being late to the party, Microsoft quickly took center stage and dominated both industries. Despite not being as agile as new tech startups, when it comes to working with business and government, they almost always prefer the established player. Not to mention the ability to bundle with the rest of the Microsoft package makes it essentially a no-brainer. And their most recent headline would be the acquisition of Activision. The acquisition of Activision. Well, that's hard to say. Which is estimated to cost just shy of $70 billion. Which is a bit of a tragedy as they would have got a much better price right now. But hey, hindsight's 20/20. And so was the pandemic. And unless you live under a rock, you pretty much knew all this. Microsoft is a giant. It is known throughout the world, a leader in many fields, and is part of the old guard of tech. So to justify its nearly $2 trillion valuation, it needs to pull the numbers to justify it. So let's take a look at the financial reports and see if it lives up to it. As to pretty much everything this year, 2022 has not been friendly to the share price of Microsoft, nor basically any company. Microsoft is down 28% year to date, which is actually better than most of its peers, but is not fun to see when you own it. A small ray of hope is that the last month hasn't been too bad. Over the last month, the stock is pretty much flattened out and is holding steady so far. And as we all know, past performance is not an indication of the future. And in the short term, stocks are known to be volatile. The goal of every investor should be to stay calm during any volatility. And hopefully Microsoft's quarterly reports reassure you. As you can see Microsoft's revenue and gross profit, this company is quite the machine. A steady climb and one that should not be all that impacted by the pandemic woes. Microsoft does not have the supply chain issues of Apple, nor did it have the outburst of spending as did Google and Meta. While the pandemic did increase a surge of IT support, most companies and organizations are unlikely to actually unsubscribe from those now that it's over. Many remote and telework policies are still in place, and it's good to have the technologies already there in case it ever happens again. With the exception of its gaming division, Microsoft's overall revenue is a lot more resilient than most of its peers. As you can see, over the last 6 years, Microsoft has been able to double its revenue. Alongside it, their gross profit has grown along with it, with a gross profit of 64% in fiscal year 2016 to a 68% gross profit in fiscal year 2021. Not only have they increased revenue, but they increased profitability along with it. For every dollar Microsoft makes, 68 cents is gross profit. And as a helpful little tip, keep in mind that their fiscal year does not line up with the calendar year. Now, we all know gross profit isn't the best metric to use, as the true end profit goes to the net income, which factors in things like R&D, some administrative expenses, as well as any taxes or interest paid. Microsoft's net income exceeded just over $72 billion in fiscal year 2021. To get a better perspective on that, in fiscal year 2016, Microsoft's net income was 26% of revenue. In fiscal year 2021, their net income was 36% of revenue. This basically gives Microsoft the complete ability to spend 36% of its revenue on anything it thinks it needs. This can go to R&D, research, acquisitions, share buybacks, or dividends. A company without strong net income will have nothing left for shareholders, and Microsoft has a lot of net income. Now let's take a peek at the balance sheet. Assets are usually pretty boring and not much to see unless a company is expanding a physical footprint quickly, such as stores, warehouses, or something that involves a lot of square footage. But on the liability side, you can see that the current liabilities have been increasing quite a bit over the years. This may be in preparation for them to acquire Activision, but it's hard to say. Surprisingly, their long-term debt is steadily decreasing. So unless they haven't pulled the financing for that yet, it doesn't seem they're using long-term financing for the acquisition of Activision. Either way, with the cash on hand and the amount of net income it has coming in every quarter, Microsoft should have no issue paying any of its liabilities, even with Activision. And the last two things I want to look at on Microsoft's books is that their cash from operations more than doubled over the same 6-year period. This basically means that every dollar Microsoft puts into itself, it is making more out of, at least than it used to. Alongside that, you have the shares outstanding, which have been decreasing, albeit incrementally. Unless Microsoft has a few more acquisitions up its sleeves, this will likely be increased after Activision is paid for. And those are Microsoft's numbers. They are pretty impressive and pretty much beat anything except for, the one company that has a higher valuation, Apple. But even despite Apple having a higher valuation, Microsoft is typically a stronger bet when it comes to a defensive stock. Its customers are more reliable, entrenched, and because how necessary IT support is, they are unlikely to decrease spending significantly just because of economic downturns. That takes us directly into the business and operations of Microsoft. As you can see by this chart, Microsoft breaks its revenue down into 3 primary categories: productivity and business processes, intelligent cloud, and personal computing. We touched up on these earlier in the video, so I won't go over them again. But it's important to know how they break their revenue down, as by the breakdown you can tell what they prioritize. With productivity and business processes, Microsoft has a strong footing in enterprise and government technologies. And because of the recent emergence of the cloud, Microsoft has allocated an entire portion to itself to that single cause, which as you can see by its growth definitely was a safe bet to make. Their least performing side is the personal computing side, which consists of most of Microsoft's legacy products that are for normal people, from Windows to Office to Xbox. And the convenient part about that is Microsoft basically breaks itself down by category of industry between business IT, cloud, and personal computing. Business IT will likely be halted for a while as the economy wavers, but because of it being core to operations, it is unlikely to be cut. The same is pretty much for cloud, although it will keep growing, but probably at a slower rate. Personal computing is their most volatile segment, as game sales and game consoles will likely take a major hit, although most of the subscriptions should hold up pretty well even in a downturn. However, when they take over Activision Blizzard, they will have an even greater exposure to the gaming market, which is highly cyclical and ebbs and flows with consumers' wallets. So based on the industries that they are in, I would be surprised to see Microsoft have any kind of revenue decline, although the next few years may be a bit sluggish. Now the fun part, or depressing, depending on how you look at it. Nah, it's pretty depressing right now. On the economic front, it seems like on and off recessions are going to become the norm for a while, alongside an energy crisis which may or may not get worse during the winter. We have a lot of people on both sides saying it's going to be an energy apocalypse, and some people say it's going to be manageable. So maybe somewhere in between. Whatever happens will have an impact of the world economy overall. Alongside that, we have civil unrest all over the world, from Iran to Russia to China, all of which will have implications on supply chains, materials, and components, with China being the main concern for world growth. But despite all that, Microsoft is relatively immune to it. And by immune, I should probably say resilient. Because of their subscription model, Microsoft has a lot of pricing power. It is hard to replace them, and therefore they can charge and fluctuate as they need to. This allows Microsoft to adjust to inflation concerns, and because it doesn't make any physical products, it doesn't really have much of a supply chain to worry about. Its exposure to Russia, Iran, and China are relatively limited. Actually, basically just China. Iran and Russia didn't have much to do with Microsoft anyway. But luckily for Microsoft, China banned it from participating in their market basically 2 decades ago. And because Microsoft focuses on large government and enterprise contracts, they are in the best position of big tech to handle any of the economic downturns ahead. So let's zoom out a little bit and look at Microsoft as a whole. They are highly profitable, they are highly resilient, They have both long-term contracts with both governments and companies. Because of their wide moat, they have a lot of pricing power. And because of their focus on subscriptions, they have a lot of recurring revenue. The three primary industries that they are in are forecasted to have many years of growth ahead of them, with their personal computing and primarily gaming being the most cyclical part of their business, although it is also the smallest part of their business. In the short term, because of the large acquisition of Activision Blizzard, they are unlikely to have massive share buybacks or dividend distributions in the time being. All that being said, Microsoft is the most resilient of the big tech giants, which could result in a bit of a challenge for that number one spot in big tech. But those are just my thoughts. Let me know what you think of Microsoft in the comments below. And as always, support the channel with a like, subscribe, and keep watching interesting investments.